2015 has been a difficult year for emerging markets, but we see some signs that the pressures on emerging markets are going to be easing. In China, the economic green shoots are starting to emerge, and we look for some positive economic and policy developments in the months ahead. In commodity prices, there's been an adjustment, and we think we're going to be entering a period of less volatility, range trading. Finally, emerging market currencies have been under a lot of pressure against the dollar. We think they continue to drift weaker against the dollar, but some of the things that have been holding down emerging market currencies, those things are going to be easing going forward. In China, there are signs that there are green shoots emerging in the economy, particularly in the service sector. We've already seen the housing market start to gain some speed. We've already seen credit growth pick up. Recently, interest rates have been cut again, and the government has announced tax breaks to boost housing and consumption. We think that this, plus the momentum that we've already seen, will see GDP growth getting stronger as we go into the rest of the year. On the policy front, we're looking for some good news in the months ahead. We think that the IMF will include the renminbi as one of its reserve currencies in SDR. This is going to provide a bit of a boost for sentiment on Chinese markets and could also encourage some capital inflows into China as well. We think that commodity prices are going to be a bit more stable going forward, and as a result, people will be a bit more comfortable with the emerging market producers in commodities. The reason for this view of ours is that supply in a number of the commodity markets has come down. It's come down in metals and it's come down in the production of oil. Meanwhile, demand for both energy and metals continues to grow. This means that as we go into next year, the supply overhang that we have in the commodity markets will ease, the volatility in commodity prices will ease, and I think this is going to provide some reassurance for people about emerging market producers. Emerging market currencies have come under a lot of pressure in the last 3 years. They've dropped 30% against the dollar. We think going forward, they continue to ease against the dollar, but the pace of depreciation will be less. There's a couple of reasons for this. Very firstly, after the sharp gains in the dollar, the drop in emerging market currencies, the dollar is no longer undervalued. Secondly, commodity prices, which had been weighing on emerging market currencies, they're likely to go into a range. And very finally, there's going to be more policy clarity on what the Chinese want to do with the renminbi. We think that going into next year, the Chinese are likely to creep the renminbi lower against the dollar, but there won't be a repeat of the August surprise when over 2 days the renminbi dropped by 3%. The three key factors on emerging markets, currencies, commodities and China, we think that these are going to be a little less worrisome for investors. And going into the rest of this year and into next year, we think that there's going to be a slightly better tone in emerging markets. Thank you for joining me and discussing these key issues for emerging markets. Good luck and good insights for the rest of the year.